Hey, this is Don Kaufman at TheoTrade, inviting you to an upcoming seminar this December 7th. That's Thursday, December 7th, 8 p.m. Eastern Time, 7 p.m. Central Time. How to reduce risk and maximize your returns. You know, at this point in time, I feel incredibly strongly about really discussing risk reduction. We're going to talk a little bit about, of course, a decade of poor fiscal reforms and quantitative easing has really left us in an incredibly vulnerable position. We're going to talk about a couple of, easy steps you can evaluate all of your risk and really learn to successfully navigate what appears to be substantially more turbulent markets. We're going to look at how to reduce risks and imminent risks of a 401k, IRA, retirement accounts. One of the things that struck me specifically to want to host this session here, December 7th. Again, it's Thursday, December 7th, 8 p.m. New York time. I'll give you the address here momentarily. One of the things that really struck me happens to be this. This is the $IMX. It's not often I go to a chart to talk about an upcoming session, but what the $IMX happens to be, it's the TD Ameritrade Investor Movement Index. Now, it's not, okay, and if you ever want to pull it up, it's $IMX. This is not like a sentiment index. What TD Ameritrade does on a monthly basis is they accumulate the positions from millions and millions of clients. So if they have 8 million clients, they literally accumulate the bullish and or bearish positions, okay, from those particular clients. And there has never been, their reading just came out for November. There's never been in the history of watching this as bullish a reading as right now. Now, I'm not using this, this TD Ameritrade customer kind of account reading as negative sentiment. It's quite the opposing. I'm saying right now, if you think about this, okay, literally the wealth of individuals that either trade or individuals that have 401ks or IRAs, it's never been more bullish than right now. And it would only take one or two just really ugly trading days to wipe out 10, 15, or even 20% of the wealth of this marketplace. And again, it's just, you feel strongly about something, and we're going to talk about risk reduction. Again, this session, we're going to talk about how volatility equates to risk over there. Again, how to hedge the 401k. We'll discuss a little bit about expected move and implied volatilities. And really, you could discover some opportunities, even some of the most docile markets. Again, I invite everybody to attend. It's TheoTrade.com, TheoTrade.com/survive. And I'm telling you, you need to learn these skills. December 7th, that's Thursday, December 7th, 8 p.m. Eastern Standard Time. Thanks, everybody. Welcome to TheoTrade. This is Don Kaufman. Here we are. It's December 4th, 2017. Well, we still have about 15 minutes left in the trading session. And I have to tell you, some of the recent trading days, trading weeks, and really the last couple of months, we've been looking for volatility. And yet that's exactly what the markets threw at us today. The Nasdaq, let's start over in the Nasdaq, which is down right now about 1.25% and displaying right now over 130-point move in this trading session. So the Nasdaq out of the gate this morning starts relatively strong before getting whacked back and continuing to fall. There have been a number of times today where dip buyers actually came in, and ultimately we're rejected in this last time in probably the most hostile manner. You'll also see that kind of effect inside of Amazon specifically, where I have to tell you, this felt like attack of the algorithms out there today. I mean, you're looking at minutes that were crossing through here in Amazon where it traded 40,000 shares a minute. Now, that may not sound like a lot, but it's 40,000 shares in a $1,100 product which is phenomenal if you figure out kind of the total value traded through there. But let's dig down to what's really going on kind of in the underbelly of this beast today. Specifically, the sell side activity over here, it's not even so much just the Nasdaq futures as it is very specific into what we term the monsters of tech. Now, the monsters of tech, this equates to a symbol that we constructed. It's Facebook, okay, plus Apple, plus Microsoft, plus Google, plus Amazon. And it's a ratio, okay? So it's taking those 5 products and equating them to one another, ratioing them together. And you can see they've gotten whacked here today by the amount of about 2.2%, which we're almost getting to that level of like real statistical significance. All right, so neither here nor there, right? There's sell-side activity in the monsters of tech. Obviously, everybody realizes that underlyings like Facebook have just sustained incredible gains over here. Some of you guys might be giving some of those gains back. However, there's a lot more going on in markets today. It's not just, again, about the Nasdaq being down to the monsters of tech. Specifically, I want to take you into the Russell, which is now in the last 2 trading sessions throwing off some of the most wild volatility people that we've seen in years. And again, I'm going to throw that out to you there for your own consumption. It has been years since we've seen volatility like this, okay, on percentage moves in any product out there. If you take a look at the Russell, here's actually a print this morning out of the gate here, up to 1562, now trading 1530. However, if you take a look at the Russell on a 30-day, 1 hour, these prints are correct. The Russell has been, and I love to say this, Mr. Toad's kind of wild ride, and there is more sell-side activity into this. Again, you're looking at a 30-day, 1 hour. The question of some of the volatility that we're seeing here, and again, we're going to go a little bit more detailed into this here momentarily, is it going to persist? Okay, I mean, the question mark is always, and that's why people tune into a lot of these videos that we do. The question mark is ultimately out here, you know, are they going to come in? Are they going to try to buy the dip? And for that answer, what we're looking at right now happens to be specific to the volatility. Okay, and I want to make this abundantly clear. If trade starts to come in, all right, here today and really starts to buy up volatility, you're going to see everything start to be sold off. You know, we still have asset classes specifically today, like financials. I mean, financials are still up 1.67% here, right? And yet at the same time, the S&Ps are down ever so slightly, being dragged, kicking and screaming underwater ultimately by the Nasdaq. But volatility at this point, it has everything to do with it. And I'm going to come into this reasoning here for a moment. I'm going to leave you with some pretty hefty thoughts. If trade in the next, and again, it might not be, you know, to the close today, could be a little bit tomorrow, but you need to keep an eye not on the VIX. Let's not bother with the VIX. The VIX is, you know, it's as dead can be. Looking at the VIX, traders would have to then go in and they have to buy puts in the SPX to influence the VIX. You want to look specifically at the volatility futures, okay? And so why do I point this out? There are record short positions inside of these volatility futures. I'm going to state that again. There are record short positions in the volatility futures. So at any point in time, the volatility futures really start to take off to the upside. In order to mitigate those risks of people that are short, and again, think about this as major institutions. They've been out there, all right, long markets, short volatility, long markets, short volatility. The second that the volatility futures start to rise, okay, they may have to cover some volatility futures. If they start covering volatility futures, and for those of you unaware of this, and I want to lay this trade out for you here. So imagine that some firm, okay, happens to be short, all right, and again, short these volatility futures, and let's say that they're short just 100 contracts, which is a mild position for a big firm. They're short 100. How do they cover? They turn around and buy back 100. By buying them back, what does it do? It vaults the volatility futures higher, which will cause other firms to have to turn around and buy theirs back. And the way that they can mitigate risk of this, because as the volatility futures start to vault higher, the way they'll mitigate risk of that is instead of just buying back their volatility futures, they'll come in here and start to sell the S&P futures. And we might actually be seeing a little bit of that. And it's an unwinding, if you will. It's an unwinding of this, what has been this cyclical, almost unforgiving trade. And that unforgiving trade is buy everything, buy everything, buy everything. And you can see the S&P's heading higher. And again, as they bought everything, they sold volatility. We might actually be seeing a bit in the cusp of the unwinding of that. Now you're like, well, how could that be? Come on, the volatility futures are still down here today. They're still down 17 cents. Yet, nevertheless, we are seeing a fairly steady bid to volatility, okay, from the course of this morning. And specifically, this is a fairly large move in volatility futures as the marketplace has reversed. So again, the longer this progression continues, and the S&Ps right now, they're only down 3. I'm telling you, eyes on the volatility futures the next several trading days out there to get a better feel if markets are going to continually get sold. Now, do not be surprised if we don't, see some wild bounces. The whole question is, are traders going to step up right now and sell into those bounces? I mean, everybody is going to have to recognize here the psychology of a marketplace, okay, that, like the Nasdaq, that's going to close very close to its lows of the session. The psychology is real simple. I don't need to be the first one out, but I can't be the last one out. And nobody wants to be the last one out the door. So anytime we see a bounce, we're going to find out here in the days to come if there's going to be sell-side activity into that. This is just the possibility, okay, of one of many days where dip buyers were completely rejected. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.